Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host Joel L. Condon, along with Brianna Valesky, and we have Serge Berger on the line. He is head trader and investment strategist at the Steady Traders. Serge, how you doing on this 6th of July?
Not bad. I wish we could say it was a little different than a week ago, but it's not. We wake up to another Greek headline, and here we are.
Two Mondays in a row. Two
Yep.
Mondays in a row. Over the weekend, you have the bad news with it. Do you try and put any hedges on over the weekends, or is your hedge just by being a little bit more in cash? Do you try and play these tricky events?
You know what I've actually done over the past couple of weeks, or I would say the past week or so, I've gotten a little bit. I've tightened my time frames a lot, and I've actually done some intraday trades in the indices just to kind of warm up because I think we finally are at a more volatile period. As you know, I'm not a day trader per se. I have positions from 2 days to multiple weeks in duration, but I think sometimes when you get into these more volatile periods, it helps to kind of warm up and do some and tighten the time frame. So I'm doing that. I've raised cash. I actually hold a little bit of gold as a hedge here, just from a volatility perspective, and yeah, just try to be a little bit more nimble.
What do you think about these two big down opens? I mean, the characteristics of this bull market has been the buy the dippers coming in and on any kind of pullbacks here, but now back to back Mondays, you're going to have, last week we rallied all the way back. This week, we are, 17 handles off the pre market low. Do you think that this is kind of, throw Greece aside, throw the Fed aside, throw earnings out? I mean, are you starting to see a little bit of trading action that might, change your long term outlook on the market?
Yeah, what I've been saying all year, and also on your show, is that I think we're going to see at some point this sort of summer, maybe late summer, maybe even to early autumn, we're going to see some sort of 10 to 15, maximum 20% pullback, which is going to basically correct, let's say, the 2011 bull market, like since then, and then I think we'll have a really, really, really big rally in the year end. So the volatility here, just to me, more so just kind of confirms that I think we're seeing this volatile period perk up now. I don't think Greece is going to be something that's really, causing a global meltdown, but it could be an excuse to kind of see people kind of, move this volatility from other asset classes finally over into equities, at least for a couple of months or so. So I do think the highs are in for the time being in this booze, if that's what you're asking.
All right, and moving on here. I mean, there's always money moving around, right? If they're selling something, they're buying something else. The last leg of the market, has been a lot of the financials, the banking stocks. Basis the BKX here. Do you expect to see continued strength in this sector?
I have been very bullish. Banks, again, also on your show for the past, let's call it 2 months or so. We talked about that Bank of America trade at some point, and I sold all that stuff up 2.5, whatever weeks ago, or maybe 3 weeks ago at this point. I don't know, I can't remember exactly. I just think the rise has been too steady. So if you look at something like the BKX, I don't know if you're pulling up the chart I
Yep.
sent you, but basically, if you look at it on a weekly perspective, over the past 2 weeks, we've had my gravity pool setup, which is a very high probability setup that basically calls for lower prices from a multi-week perspective, and the price action has been as such that we saw on a too steady of a rise. I think from a pure price perspective since the breakout in March, April. We then had a couple of, let's calling shooting star type of candles. The 2 weeks ago and 3 weeks ago, and then last week follow through selling. So that usually tends to see more, a better mean reversion move. And if you look at the banks, they actually broke out of a long base, right? This past spring. So I do think we have to retest that breakout area, which, in something like Goldman Sachs specifically gets us back to like 200, 195 to $200. And that would, I think, coincide quite well with what the banks, and I know Goldman's not a bank per se, but they tend to act pretty closely.
And do you think, any of the, what's going on with Greece at all? I mean, their exposure or that you think they're going to get penalized at all for, what's going on over in Greece?
I don't know, man. Maybe you have an answer for me on that. What I know is that the banks that had most of the Greek exposure in terms of Greek debt, which were the two Frenchies, I think for the most part they've kicked that stuff off the balance sheet about 2 years ago or something. So I'm not sure. People had a long time to get used to this stuff. So again, to me, honestly, I look at this point more from a humanitarian perspective, which is really sad what's happening. From a market perspective, we have to just deal with what is. And it's probably an overreaction in the bigger sense, but in the meantime, it's just going to be choppy.
And what about the European banks here? Until this is settled, is it hands off here? Deutsche Bank here. This stock really has not rallied with the other financials here. The longer term chart looks terrible here. Why don't you give us your outlook on a few of the European banks, starting with Deutsche Bank?
Yeah, I see what you mean. I mean, if you look at it purely from a price perspective, obviously this would call it ultimately for a lower low versus even the 2009 lows, right? What's happening with Deutsche is they've had a management reshuffle earlier this year, so I'm not sure. Given my bigger picture outlook for the continued recovery of Europe and B just a general recovery of the banks both in Europe and stateside, I don't want to be short something like Deutsche Bank. I would love to buy it on a washout, but I don't think you want to be short this because the banks in general have really, really lagged the entire market melt up since 2009. So I think if we see one more big rally up, until we have a better sort of cyclical bear market, I think we need to see a rally in the banks. And in fact, that last leg should probably be led by the financials because we've seen some relative strength this year, but certainly not enough, obviously, to carry us on here because I think first we're going to see some more volatility.
You talked about the Bank of America and you exited that a couple weeks ago or a week or so ago. Now, when you get in a trade like that, you buy it, then you sell it. I mean, do you have? I mean, you talked about it. Coming back to the breakout area. Are you going to wait for this thing to kind of broke out from what the 1680 level? Is that what your target is, or where do you have a place where you want to re-enter this trade, or you just evaluate it on a day-to-day basis?
I think at this point, considering what we just said for the past few minutes in terms of the general market jitters and the uncertainty around Greece, I'd prefer to just kind of take it day by day because the volatility is going to make it very easy for something like this to get stopped out on, right? I mean, we've talked about the past few weeks buying stuff on dips as opposed to buying it on breakout attempts, and you brought that up, and I think that's been the only thing that's worked year to date in the bigger picture, right? If from a directional trading perspective. So I would do the same thing here. I wouldn't chase this higher. I would want to wait for it to kind of, come in a little bit or again, just kind of see if it can give us some sort of major bullish reversal.
Okay, let's take a look at a couple of the big stocks in the S&P 500 index here. Apple getting a downgrade today has been trading in a pretty tight range. 500,000 shares have traded here, down to $1.23. Is there's anything on the long side or the short side that might get you interested in Apple as far as price?
As far as price, not at this point. I think what I said 2-3 weeks ago when they had the developers conference. I said if the stock can't move, then we're gonna have to wait until earnings. And it more and more looks like. I mean, I guess they're reporting in a couple of weeks from now, something like that. I just think that's going to be the next catalyst. I don't see anything to do. It's way too choppy from my perspective here at this point. On an intraday basis, maybe there's something to do, and it might correlate quite nicely with the broader market. So that might be something to do. But from a day-to-day basis, I don't see anything that's interesting to me right here.
Okay, what about oil? Trading down
hmm
230 here. Doesn't have it down over $3. Anything on your radar in the oil patch?
Yes, I actually this morning put out some vibes on ExxonMobil, and I think we're starting to see I think better traction there in oil versus some of those big integrated oil companies like ExxonMobil. So I don't really want to chase oil here right now because the dollar looks like it wants to rip higher with the euro weighing on the dollar index. But I think the oil stocks, particularly big ones with ExxonMobil off 20%. Let's see what the earnings bring at the latest at the end of this month. I think they report on the 31st or something like that. But to me, that would be a really nice strategic play for sort of the back end of the third and into the fourth quarter of the year. Because, like I said before, if we're going to see a big year-end rally, which I expect to see, I would expect that to be led by not just financial but also energy stocks.
All right, merger Monday here. Humana and Aetna. We talked about, the way there'd been a lot of rumblings in this sector here, and if you came in long Humana on a takeover play, you might be scratching your head a little bit. Only trading up
Yep.
50 cents here, roughly. Well, now a buck 50, moving around pretty good. Of course, that's tied to the price of Aetna here, which is selling off quite a bit. Any thoughts on this sector? Now that the deal or the supposed deal has been done here, is it time to maybe move away from this sector? I see Aetna trading down almost $9.
Yeah, no, absolutely, and I think what to me, I have to look at the healthcare sector in the bigger spectrum. So if you look at, for example, the breakout how we had on the Nasdaq biotech index, right, in the IBB, we had that move, that breakout there in early June, and I think there were two M&A deals or something like that happening at that point, and we're seeing something similar in the, say, if you look at the XLV, right? We had that breakout, and now we have another one of these deals, and it's not really helping. So maybe we saw M&A at a sort of at a medium term top in this stuff, which you get quite a bit. So I wouldn't chase this stuff higher. I would probably stay away from some of the smaller names because they're gonna chop you around. So I would probably play something like an XLV to the short side. I would trade something like an IBB to the short side for mean reversion moves, because these are things that have held up the S&P year to date, among other things, right? And if the broader market's going to correct a little bit over the next couple months, then these things by definition will have to come in, as well as with the financials we said before.
Greek crisis looming, earnings season coming up, Fed meeting in September. Boy, interest rates. Let's talk interest rates here a little bit. And is it time to start taking a look at some of these utilities?
Um, Potentially. I mean, if you just look at it from a sector rotation perspective, obviously year to date these things have been shot. So I think there's a bit of a trade here to be done. Maybe just if you want to kind of hedge yourself a little bit, but utilities. A lot of people look at utilities and say, okay, well, if the market goes down, then utilities go up. It's not that easy, right? And actually, I just we did a little survey last Friday on some of the stuff what people think of utilities, and that's kind of what they came back with. And but at this point, it's more relative space. So if you think rates are going to remain fairly subdued, as I do think, then utilities could become more interesting again as a play, particularly after that bullish reversal the past 2 weeks, actually in a weekly chart.
Okay, earnings season coming up, and I know both you and I have been looking at Alcoa here, and
Oh,
we've been watching it go down here, $11 level. I kind of thought, I'm glad I didn't step in early in this one. I kind of thought that whole $12 area was going to hold. We have Alcoa kicking, I believe, earlier in this or later in the week that's coming out. What an oddly looking daily chart on this thing here. Any hope for Alcoa here? Maybe, they've been beat up so bad, no matter what they deliver, we'll give it a little bit of a pop.
exactly. I mean, that's my thing. That's my theory. I don't traditionally like to just buy stuff into these kind of holes, but I mean, if you look at the move since that lower high in early May, I mean that has been about as persistent, as hideous of a selling spree that I've seen in a long, long time in a non like biotech or something wild stock. I mean, this is Alcoa. So I'm in the camp that whatever they throw out, we might see a bounce. Um, it's really that simple. I mean, it's a little bit difficult to see. Maybe they're gonna flush it out a few more percent. That's entirely possible, but it looks really tired, really, really tired.
Big Jake in the chat's popping in here. Kraft Heinz is going to be start trading today under KHC. Deutsche Bank has already started to outperform an $85 price target. They believe that 3G will find 0.3 billion or so upside to this 1.5 million projection as it gets to know the Kraft business. That was Credit Suisse on that, not Deutsche Bank. Any interest? You gonna let this trade for a little bit? What do you think about the combo Kraft Heinz company?
Yeah, I think it's interesting. I think you want to let it trade a little bit. Exactly. I mean, you just took the words out of my mouth. Absolutely. That would be my approach. Um, so I just let it establish a little bit of price history. I mean, that's my general approach. I think this isn't going to be one of those cowboy stocks, where you have to kind of swing for the fences on. This is probably going to be fairly contained in terms of volatility, at least after a while. So once it's established some sort of a rhythm, you can probably look at some defined trades, and this stock may get very boring, in like a year or two, but it may be interesting as people try to get their heads around it, and figure out the business model. Analysts have to understand the dynamics of the company. I think there's definitely trading opportunity in this.
Okay. Do you have your Fitbit on? Do you wear a Fitbit?
It broke.
No
Yeah, it
way.
broke.
Really,
Ooh.
Serge? It
Yeah,
broke?
actually, I think I had three bands that snapped. I don't know
Really?
what I did. Yeah.
Wow,
What are
no
you
way.
doing? Are you boxing or something with your Fitbit on? What are you doing?
No, I'm doing this CrossFit stuff, man. It's like a CrossFit of between like this insanity program, and then I do
Ooh.
this kettlebell stuff, and I all sorts of craziness, and he keeps snapping these
You're
bands.
not letting it affect the way you trade the stock, are you? You're not revenge trading it.
No, I don't know. I'm not even. At this point. I'm so beyond, frustrated with the product. I don't want to look at the stock.
Really?
That's that's an interesting point though. I haven't heard anybody say that. I wonder if their products are cheaply made.
Yeah,
Or at
well,
least the
Well, there's
band.
there's another one that's even worse. It's called oh geez, it's not coming to me right. Anyway, I mean, there's a certain quality issue with some of those. So
With
okay.
smartwatches in general.
Wow, we just got a nice blast in the S&Ps here. Anything out
yep.
of Greece there, Luke? Luke, help me out. Garrett, we just had a blast north here by the dippers coming in. It sure looks like there's news here. 57 even. We're trading down 12. All right, Serge. Thanks for coming on. Great take on the markets here, and we'll check in with you next week.
Thanks, Serge.
Thanks, guys. Have an awesome week.